So today in this lesson, we're going to break down how to trade this market, right? We're going to break down two tools that will give you the confidence you need to enter, execute when you need to without any hesitation. How many times have you been trading and you're looking at the price and you're going, dude, what am I looking at? Right? You're extremely confused. You have no idea what's going on. And then you just put on a trade. And next thing you know, you're like, why did I take that trade? It's because you do not identify clear criteria, right? Clear entry indications that you need to see every single time before you pull that trigger. Today in this video, I'm going to break down what it is I use and what helps me get in and out of this market with confidence. So the first thing I'm going to talk about, right, we're going to give you some context before going further. We're going to be talking about this date right here, Wednesday, October 24th. And what we're going to be talking about is the tools that I use to get in and out of the market. How do I know to pull the trigger? How do I know what's going to happen next? See, I don't need to. I need to watch price action and be cognizant of how it's reacting to two things: moving averages and pint numbers. See, pint numbers are the previous day high, low, open, close. Those are my main effective levels that I'm looking to trade off of. Then the moving averages. This is the 50 EMA. I also use the 9 and the 20, but I'm only going to be breaking down the 50 in this lesson. If you want more information on the 9 and 20, comment 9 and 20 below. So, to give you a little bit more context, we were going into this day very bullish. Let me whip out the 1 hour time frame so that we could take a deeper look into what the context of the market looked like. So we've been approaching all-time high, right? So all-time high was at 57475. And you could see price was kind of, doing its thing, consolidating in between, right? We got a little support right here. We got a resistance up top. Okay, cool. So now going into this day, I need to understand if it's either going to be bullish or bearish. I never assume anything. When you assume things, assuming gets you killed. Assuming ruins your equity curve. Because we, as humans, our brains work in a way where we're constantly trying to predict the future. It's a survival mechanism. If you walk outside right now, your brain's going to be like, that car's going kind of fast. Maybe I should get out of the way so I don't die. You're constantly trying to predict what's going to happen. There's nothing wrong with that until you start trading. Once you dive into the market, there's threats everywhere. Because when we lose money or when there's fear, a ton of emotion involved, you are constantly going to be on the lookout. So to become a good trader, you have to become more objective. You have to become more unbiased. This means you got to stop predicting. And it's much easier to say than it is to do. This is why I love my pit numbers. This is why I love my moving averages. Because what they did for me was help me to stop predicting. Instead, I would watch price action, observe how it was reacting to these tools, and then I would make my trades. So to break down the day, right, we have all-time high up here. So now let's break into the 5-minute time frame. And bear with me, my think or swim is currently down, so we have to use TradingView. So the market is consolidating, right? And the first thing I'm going to do is whip out my pint number, right? We have previous day high right there, and now we have end of day. These are two very important pint numbers. Why are pint numbers important? Because these are the levels that hold a lot of volume and liquidity. So let's bring it back to predicting versus reacting. If I'm going to predict the market, I'm going to be like, oh, the market's rallying, so I have to go long. Or, oh, the 1 hour time frame looks very bullish, so I have to go long. See, looking at the market like that is not a repeatable approach. Instead, I identify my pit numbers and I go, okay, based on how price reacts to end of day and previous day high and the EMAs, I'm then going to make a decision if I'm going to be bullish or bearish. So now watch how price here opens up, right? Opens up right next to end of day. So now open print and end of day are literally within 2 or 3 cents together. So open print is another pint number because there's massive amounts of volume every single day at the first opening bell price, right? Remember, we follow the volume. Now look at the 50 EMA here. Price comes into it, can't close below it. Price comes into it, can't close below it. So at that point, I'm now going, okay, sellers are weak. Because if sellers were strong, we would have been able to at least close below the 50 EMA. On the contrary, buyers kept pushing price above it, and now we're closing above open print and we're closing above end of day. So now I'm ready to make my decision, right? I have a clear area to stomp out at, right, which is below the previous candle. Now I need to watch price react to open print, right? So now price rips up, and on the 2-minute time frame, you will see the entry that I had. And the 2-minute really helps me become very clear on who's taking control of the level. So I use the 50 EMA on the 2-minute, but not really to identify a bullish or bearish bias. Instead, I use the 2-minute to really understand who's controlling that level. Price falls below end of day, comes back up, comes above open print, and now on the 2-minute, you're going to see we come down, and now we're ripping above, and this green bar here wipes out the previous red bar, right? The high on this green bar is higher than the low on the high of this green bar. This is telling me that buyers are here with more strength than sellers. This doesn't work 100% of the time, right? There's nothing in the world that does. But this is extremely effective when you're trying to see who's controlling the level. We've already cleared out sellers. Buyers kept holding that 50 EMA. They're holding end of day. They're holding open print. At this point, I am long, and my stop loss is going to be below the previous candle. So I'm long here. My stop loss is here. 572.99. I get in the market around 573.46. That's around a 50 to 60 cent stop loss. That's all I'm willing to risk. And I have a very large upside target. I'm targeting 574.75. You can see buyers continue to hold and push price above. And then we got a massive rally above it where I then exited the trade. Let me see here. I'll show you guys. If I pull up my Discord and we just run through here. Let me go to, where is it? Daily recap. Not that one. Well, let's see here. So in the Discord, you're going to see I'm constantly logging every single trade I take. Here it is. Look at, so every single trade I take, I post and I log into trading metrics. This is where I gather data so that everybody on the team is completely aware of our edge, completely aware of the trades I'm taking, and why I'm taking them. And you can see here, we got the break above open print. We come down, we retest open print on SPX, where I then took the market long, targeting that all-time high level for 145% ROI on this trade. There's so many times where I used to watch the open and I used to struggle. I had no idea whether to go long or short or to sit on my hands. Use the pint numbers, use the EMAs, become extremely clear on who's controlling them, and you will always have a massive edge. Guys, if you like this video, make sure you hit a like, subscribe for more content. If you want to get involved with my team, click the links below. I offer a full in-depth trading course, over 20 different mini courses that come with 12 months full access to my team. Stop fucking around. Let's level up.